Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Thursday, December 16th, and this is your end of day market video. Risk disclaimer in front of you. Everything that we're going through is for information purposes only. You can read the whole risk disclaimer here. And of course, if the video is not rendered or a little bit blurry, just give it a little bit more time. YouTube is taking a long time to render my videos. Perhaps I'm sending them out a little bit later too, or filming them a little bit later. But nevertheless, let's get into the price action for the day. I mean, this was very ugly yesterday, and to kind of rehash, I mean, if you're not a member of Tribeca Trade Group, we talk about this stuff, all day long, and I try to provide commentary here and there where I think I can add value and just, some of the observations, right? We talk about these things pre-market. We have a pre-market commentary every morning where I kind of come up with a plan and some of the things that I'm looking for, and then, a plan if things don't work, right? And basically what to watch. So, if you're reading some of my posts on Twitter or just end of day market commentary, you're not getting, I guess, all the context that of the things that I'm looking for. And some of these things can kind of feel like, hey, he's seeing this hindsight. But I will tell you, from where we were yesterday and where we were this morning, we've kind of been at these decision areas, right? And it's, first of all, the price action has been very whippy. And it's a reminder, too, that, the market will do whatever it wants to do, right? And we can't control what happens in the market. We can only respond to what the market is doing. So, if you feel like, I hate this term all the time that I hear on Twitter, and I complain about Twitter a lot, but I hate this term rug pull, right? Yes, there's times like it's kind of used, I think, as like an excuse. And I think, like, as you develop, as a trader, you want to just be able to kind of say, to think about things a little bit more objectively, and realize what the price action is telling you. Realize when we rally up to a resistance point, realize when we kind of come into a support level. And if the support level doesn't hold, what are you going to do, right? Or if we come up to a resistance point, how is that going to, like, what would you expect around a resistance point? Do you want to be taking, adding more risk at a resistance point, or do you want to be observing? And if we don't get through a resistance point, right, how do you want to be handling that, right? When you start to kind of think about things like that, rather than come up with like an excuse or blame, you're getting yourself to be a better trader. All right, so we're going to talk about a couple things about like that in the video, and also, like, some days like this, right, and weeks like this, right? Keep in mind this is a very heavy event week, right? In terms of, you've got quadruple witching tomorrow, all kinds of, this is a huge index rebalancing, and I know that people don't understand that on Twitter, because they didn't work at they didn't work on an institutional trading floor. Right? I spent many years working on a Delta One trading desk, and I was astounded at how much money, right? First of all, is tracking ETFs. So the more money that tracks ETFs, the more that these quadruple witching, the more volume that's going to occur on that for index rebalancing, right? And I'm not even talking about, some traders are like, they're aware of, monthly option expiration. That's small in relation to, how big index rebalancing is. So there's a lot of money that's changing it. So you have that, and you have a Fed meeting this week. So this week is kind of living up to what we thought coming into this week, is that it's going to be very whippy price action. And there's going to be some changes that are going on in people's portfolios too. So that's a little bit of, like, just a thought about some of this price action that we're seeing with the back and forth. Does that go away, like, for next week? And is this basically just a phenomenon for this week? We don't know yet, and that's why, like, I think that, observing, rather than trying to figure it out like every 2 seconds in this market, is very difficult to do, right, when things are moving like this. But one of the things that we said coming into today, and I think I mentioned this, I said we're right at the top of value, right, from where we were this morning, right? And if you look, what I was talking about this morning, I said, first of all, what a difference a day makes. So this is what we look like at about 8 o'clock in the morning, right? So watch this level, this 47.13 level. I mean, look at how this looks now. It's amazing, right? And then specifically with NASDAQ, I thought that the NASDAQ, we were butting up against, again, look at the difference in the picture from this morning. You know, we were right at that 16,420 level. So, and it's amazing back away from that level at this point, 16,420. The other thing that we noticed too was that we were at the top of value, right? So again, resistance, right? So for me, realizing some of these things, and it helps to have the market webs, which is a proprietary study that we use, which is volume at price, to tell you where these resistance levels are. But I will tell you, you don't need, if you're newer to trading, right? Well, I could tell you one of the best things to follow is just the price action and the trend, right? I was talking about this name this morning, right? Because I saw people posting that this looked like a good setup for the day. If you're not picking up on this stuff, you don't need all these studies on the bottom of your screen, right? This kind of helps for if you've been trading for a long time and you're trying to tweak, what you're doing. But just simple trend lines in Tesla, right, has told you that there's been something wrong with Tesla for the last couple months, right? It made a high here, and it definitely, hindsight 2020 got a bit ahead of itself. The next time that it tried to rally, right, what did it do? It made a lower high. The next time it made a rally, it made another lower high. This is called weakness, when you cannot get over the previous high. So this does not mean when it goes lower and it does another one and it makes another lower high and another lower high. This does not mean it's a buying opportunity. That's not a good thing, right? So be careful of who you're listening to. And, on Twitter, I've said this before. Just because someone says something confidently, that they're confident, it doesn't mean they are often, the more that you hear confidence and people talking about wonderful setups on Twitter, right? I would, number one, you could A, unfollow that person, B, just take note and do your own analysis. But unfollowing is a powerful thing, right? So the more somebody makes predictions and gets excited about a setup, in my opinion, you do not want that in trading, right? We talk about this quite a bit in these videos, right? You want to be able to stay objective. You do not want that high confidence. Right? It's good to be confident about your system, right? But the more egotistical you are in trading, the worse it gets. Okay, so this is a horrible looking setup, right? So the fact that I see this on Twitter, right, about not just this position, or not just this name, but there's a lot of things that don't look right in this space, and this is one of them, and it's a market leader, right? So so what do you do, right, when you see that there's things that don't look good in certain areas of the market? Sometimes you just don't do anything. You don't participate in this area of the market until you see some confirmation, right? There's also too many times people are looking at too many indicators because they're trying to spot a reversal, right? You do not have to be the first. You do not have to time the turn exactly right, especially if you're a trend trader, right? You want that confirmation that the trend is changing. You don't want to actually time, unless you're doing a lot of day trading and unless you're a great minute-to-minute trader, right, where you're not holding positions as investments. You're just holding them not even as, a swing trade. If you're holding them for 5 minutes, right, then maybe you're trying to spot these things and spot the turns and so forth. But if you're looking to kind of put money to work, right, and for more like medium term, longer term swing trades, right, a couple days to a couple weeks to maybe even longer, you do not have to be the first, catch the very first move. All right, so That's a story. But listen, I make mistakes all the time. I always go through the trade blotter. Look at what I did. At the end of the day, right? Whoops. So if I go through, some of the things that I did yesterday, right? I talked about this too in the beginning of the room, in the beginning of the day, saying, "Hey, if you're going to make money in this market, you and take a shot at something, you have to have some exposure, right? So it's a fine line of like, hey, things look pretty good as they did at the end of the day yesterday. I said in yesterday's video that we didn't know if it was just short covering, and I said the longs now need to carry the ball. That is not what happened, and I think it was pretty evident early on that what we saw, you begin to kind of think, and you're like, hey, what's going on? Well, it's just short covering, right? Shorts are often, as longs are, caught off guard, and they have to make some decisions based on that. So that's what I think is kind of going on, and I think that quadruple witching and the index rebalancing complicates things a bit. So if you go through, the reaction of how things worked out, here's one. Like I said, I go over the mistakes. That it's not mistake. It's not. I would not get. That's probably the wrong term to make. Right. The right thing to say is I took a shot at a trade. It didn't work, and this is how I responded. Right. Not to say that you put on a trade and it's a mistake. A mistake is holding it too long. Right. That's the mistake. And again, I talk about this in these end of day videos all the time, but the best of the best traders out there are wrong about 50% of the time, right? And they know that, and they do not hang on to losers very long, right? They don't let their ego get in the way. And you have to be okay with, hey, that you're going to be wrong a lot in this game, but you cannot stay wrong, right? So Arista Networks, right? I had traded this, made, and by the way, the net of the 2 days was a winner for me. Because if you look at what I did yesterday, I was trading calls yesterday. And I said, hey, I'm not going to, hey, I managed to catch a really nice momentum move yesterday. I'm not holding on to calls because with calls, you have leverage, right? So you're dealing with, a riskier position, in my opinion, when you're putting in leverage. So I roll this into a stock position. I took one target, and my game plan in the beginning of the day was to take profits on this move because I didn't know if we were gonna. Now I didn't think that this was gonna happen today, but I said, hey, let me take some profits and see how this market opens up, and we can go from there, right? If we get a little bit of a pullback, maybe it's a buying opportunity. So I took profits in U. It should only be one U there. Arista Networks 147. 138. So at the end, I did lose out on this trade and kind of let it go a little bit too far past my stop price, which I think was 135 yesterday. I set it at 135. I think I got out of this around like 133, 132. Right. So that's probably the mistake. Letting it kind of go down past my stop from 135. So I lost a little bit of extra money on that. But I thought that it had, I set these as soft stops, and then I kind of take a look. Now, it's still, if it gets back above 131, maybe it sets up again, right? But once it really I'm like, okay, if it can maybe bounce here at 133, let me just make sure that's right. Yeah, like into here, I'm like, once it's not holding that, I'm like, okay. Because it's probably going to take out this version point of control, and it closed on the lows. So I'm happy that I'm not holding this position anymore because we don't know what's going to happen tomorrow. Maybe it settles in and it bounces back. All right, so guys, this is what it's about: is being an adult about your trading positions and being like, hey, well, that didn't work, right? The other thing, so that's kind of like what's been going on with this group of stocks and the growth names. And, these stocks that some of us keep looking at, many of these stocks, these high growth names, I call them 2020 names. 2021, since the beginning of this year, many of the names that were in vogue in 2020 were just that. They were 2020 stocks. So, I think getting over that also helps. Berkshire, right? This is a name that I talked about on Twitter the other day. Finished very close to the highs of the day. So we're not seeing like a full breakdown in stocks. We're seeing right now a rotation into some safety type plays, specifically low volatility and dividend names. That is what's going on right now. So I've talked about this chart for a while, and this is low volatility versus high beta. I think we're looking at I have a 2 or 3 year chart in here. 2 years right now, but we can bring it out to 3 years, right? So the low volatility names versus high beta have been basing, and if you're a fan of technical analysis, right, this is, you don't want to buy this dip, right? Again, it doesn't have to be this relationship. When something is going down, you want to wait for it to base, stop going down, and then start to get over the moving averages like this is doing now. Right? Do you see the difference? Because I see so many traders, when they see something go down, they're like, buy. And because they have that mentality of buy the dip. But I've shown this before, and this is usually what happens after a big decline. You base, and then you begin to build. Okay? So if you look at this chart standalone, I've been long this, both in my trading account and the TTG trend portfolio, which we've had to make some changes. The TTG trend portfolio is more for, not so much for trades, for more investments, but I've been making adjustments as we go along and getting into some more low volatility areas of the market, and this is the biggest weight in there, in that portfolio. But I've had to make some tough calls too. Today I rebalanced it again. I've been rebalancing it once a week, giving some trades a chance to come back. But for now, so what you could do is you could either cry about the names of 2020, right? Or you could trade a little bit more objectively and realize that there's a lot of stocks going up. And what I've said in these videos over the last couple of weeks is, like, if you don't want to buy a Procter and Gamble or a Clorox, then you just have to kind of sit on your hands, because these are the names that are going up. And money is money. I said this earlier on Twitter, and we talked about this name yesterday too, right? Clorox, which I think gets up to 180, right? I know it's not as fun. I would love to be trading a Datadog or a Zscaler or Digital Ocean, right? But if it's not there, it's not there, And just buying it because it's down is not going to work if it continues to move down, right? So I've mentioned a couple times, like in my analysis, that I haven't even been going over the IWM chart because I don't like sideways type charts that are just, to me, not looking very good. Look at this IWO, which is small caps but growth, right? This may end up being a really good short. We've been definitely doing more shorting in the room. I had somebody who mentioned to me recently. They said, "Hey, how come you don't short? Why are you not shorting names? As you've been playing mostly to the long side." Because I am a trend trader, and if the overall market is in an uptrend, then I don't go against the trend, right? But if things start to change, like as we've been seeing, over the last month, there's a lot of names that have lost their uptrend, right? So again, we kind of look at the overall market first, and then we drill down to individual names. But here's another one, right? If this breaks, you could make some money on the short side while you're waiting for things to get better, right? Look at this line right now, right? So by the way, rally up to the bottom of value and fail on the 1 hour chart, right? And if you need help, what you could do is, in many of these systems, you could put a negative in front of the sign, right? And ask yourself, if you're used to trading uptrends, would you trade this trade? Is this a good setup to you? This looks pretty from the long side. This IWO daily chart looks like it's breaking breaking out. All right, so you just have to kind of get your hands around this. Now, So one of the things that I said to some traders at the end of the day in the trading room was, we don't have to figure out all these things, especially this week. There's just too many moving parts with the index rebalancing and quadruple witching. So, I would be watching. Somebody mentioned to me Nvidia, which we looked at yet. Nvidia and Apple, two of the biggest names that saw call buying. Right? We went over this chart yesterday. Said, hey, it's got to get over this downtrend line. Right? This is a failure. And I would really be cognizant if this breaks down, if this starts to break the 50-day moving average. I would get out of the way. Right? So again, I'm not making any prediction here. I'm just saying I'm having a plan, right? It's called having a plan, right? And if this breaks the 50-day moving average, that's the plan, is to get out of the way. With that and with some of the other semiconductors, right? So continuously adjusting to what the market is giving you, versus what you want to happen. Because the more that you could stay, I've been through a number of deep corrections, and the voice that was in my head at that time, and whenever we see these deep corrections and moves, which you have to, at this point, you have to say that some of these growth names have had a very deep correction. Staying out of the way is the best thing that you could do, in my opinion. Not buy the dip, okay? Because there will be plenty of opportunities once these things stop going down. Again, Nvidia is still above the 50-day moving average, but so that's it, guys. I wish I could say something more positive. But if the market gets too difficult and too whippy, the adjustments are that we talk about all the time is have on less positions, have on smaller positions, and stay away from short-term options with this type of move. The other thing too, I just want to go over a couple more charts versus keep preaching. We'll see if we can get out of this week too with the VIX not getting staying below 22 and not having another one of these moves up, right? Notice it is not completely broken down, but it's kind of leaning a bit more to the downside, right? So again, patience as always, and we'll just kind of continue to watch the relationships. But for now, the one other observation, I know I'm talking way too much here. One other observation that we kind of caught yesterday in the room, when all of the growth names were seeing that short covering, I was waiting for the low volatility, for the Procter and Gamble, which is very overbought here. By the way, I would not buy this name here. It's at an 80 RSI. It's really overbought. But I was like, okay, we should start to see the money come out of these names. We're not seeing that yet. Right, so that could be something too that you watch, right? Like if you're strictly a growth investor or growth person, right? You want to see some of these names, some of the money come out of these names, right? So that's other way, right? And then I try to give growth investors I know Procter and Gamble's tough, but this XLV was a really nice trade. I took this off today, by the way. I'm out of this trade, and that worked pretty well. So IBM trade worked really well. I got out of this, I think, for $1. All right. Apple, bad trade on the open. I was a net seller today, but that's why we put on starters. ARC made some money in those puts. This one too, I wanted to cover Fortinet too as an example. If I can find it. What did I do with it? Let's see. I must be missing it here somewhere. But yeah, here was a starter that I put on. I don't know, for some reason I'm not seeing it. Did I not put it in here? I do make mistakes from time to time. I know I put it in the regular trading room. Yeah, it must be in the other channel. But yes, I'm out of this one, and so here was what I was looking at yesterday with this name, right? Same thing with it, like Nvidia, right where it was supposed to turn. So again, high, low, lower high again, lower high again. And what we're looking for is for this thing to turn around, right? And that's why you put on a starter and you say, okay, I'm going to try a trade because I think it's going to break above this pattern of lower highs. Once it doesn't do it, you got to get out of the way. All right, guys, have a great night, and I'll see you tomorrow.